What do you do when cap rates are lower than interest rates? Let's say you live in a very expensive city. Let's say where you live, cap rates are hovering around 5%, okay? But today's interest rates are 7%. So if you were to purchase this deal, are you going to make money or are you going to lose money? You see, today, many of you are stuck in that exact same position and you're paralyzed. So my goal today is to get you unstuck. All right, so let's get started. All right, we're going to start right here to help you understand the correlation between the cap rate and interest rate. First of all, I'm going to define what a cap rate is and what an interest rate is to help you. Okay, now a cap rate or a capitalization rate is your return on investment is as if you paid all cash. Okay, that definition will appear on the screen for you so you can get it. So a cap rate is your return on investment as if you paid all cash. Here's a quick example. Let's say you have $1 million property and you wrote a check for $1 million, you bought the property. Okay, so after you collected all the rents and you paid off your expenses, remember, no loan, okay? You're just paying off the insurance, the taxes, repairs, property management, all that. And what's left over, meaning your net operating income is $100,000, right? Here's how the cap rate formula works. So you have your net operating income of $100,000 that's left over divided by your purchase price of $1 million. You do that math, that equals 10%. Okay, so that's a 10% cap rate. So that's a 10% ROI as if you paid all cash. Remember, no loans involved here. Okay, got it. Now, the definition of an interest rate, and the definition will appear here, is the amount you're charged to borrow money. That's it. Okay, the amount you're charged to borrow money. Now, let's take a close look at the correlation because it is so important that you understand this so you can make the best decisions moving forward. All right, let's go. All right, so this top line here is the cap rate. And you can see over time, cap rates have been dropping slowly, right? They have, right? And this is the interest rate line. The interest rates have been going up over time, right? And here's the correlation, okay? The larger the spread between the cap rate and the interest rate, the more money you make, the higher your returns are, okay? All right? So the greater the spread, the higher your cash flow and ROI. So this is where people want to be. You want your, so here's our situation today. What happens when cap rates are lower than interest rates, okay? It's the opposite here. This is historically what we've been seeing, okay? So the peak spread, the widest spread we've ever had was during COVID. And it was because the interest rates have dropped so much, okay? So people during COVID were making so much money because the interest rates have dropped and cap rates are just slowly going down, okay? Now, fast forward to today, right? Post-COVID, interest rates have gone through the roof, okay? Now look at this, okay, same curve over here. So cap rates slowly going down, just like here. Interest rates going up, and boom, look what happens here. This is when the Fed's raising interest rates where there's a dissection point here where the interest rates became higher than the cap rate. Okay, so here the cap rates are lower than the interest rates, right? So there's no spread. There's no spread here. So you have a spread here, you don't have a spread here. So can you make money? Right? Are you going to lose money? Right? So do you live in one of these cities today where the cap rates are lower than the interest rate? Again, it all goes back to the smart people. They're wondering in this environment, are you going to lose money? Can you make money? So that's what I'm going to answer for you today because many of you are stuck here. You see this and you're going, OMG, I'm not going to be in this market. This is crazy. I'm going to be here, right? I don't want to do anything here. I can tell you that's an absolute wrong way of thinking. Next, I'm going to share with you a case study of what we teach our students to do in this situation. Let's do that next. All right, in this part right here, I'm going to answer for you two questions, okay? The first question is, what do I do when cap rates are lower than interest rates, okay? And the second question I'll answer for you is, you may ask the question, Peter, shouldn't I just wait until interest rates come back down before I invest in commercial real estate? Okay, I'm going to answer those two questions for you right now with the case study. All right, So here's a case study of a $2 million apartment building, so to speak, okay? It's called Big City, USA. So if you live in a big city where cap rates are 5% and things are really expensive, this is for you. So pay very close attention, okay? All right, so you live in Big City, USA. And in this city, the cap rates, the properties are selling for about a 5% cap rate, okay? Could be you. The interest rates are 6.5% in this situation, right? So the cap rates are lower than the interest rates. That's the subject of this video, okay? And the question is, are you going to lose money here or can you make money? All right, the answer is yes. And let's say your deal cap rate is 5%, okay? I want to make a distinction between the market cap rate and deal cap rate because you have to understand both. You can be confused, okay? All right, so the market cap rate is what other properties, other comparable properties are selling for in this general market. They're all selling for an average of 5%, okay, cap rate, okay? Your deal cap rate is what your deal's cap rate comes out to be. Basically, your NOI divided by your sales price, okay? So you have the market cap rate established by other properties they have sold, then you have the deal in question, what that cap rate is, okay? Got it? All right, okay. So the deal cap rate, again, is your NOI divided by the purchase price, right? So the NOI, let's say the NOI is $100,000, purchase price is $2 million, right? $2 million. You do 100,000 divided by 2 million, that's a 5% cap rate, okay? So just so happens your deal cap rate and market cap rate are the same. The issue, so to speak, is your interest rate is much higher than your cap rate. That's where people get stuck. All right, so now here's how I'm going to unstuck you, okay? All right, so I'm going to make this assumption that's so conservative that you can do this, and you can probably do even better. Well, I'm going to make an assumption that we can raise our rents 5% a year for the next 5 years, okay? You can do that almost any market, even in a rent-controlled market where I am, we can do double that, okay? So I'm just being very, very conservative here, okay? So you're going to raise your rents 5% a year for the next 5 years, okay? Do the math, and you find out that, you know, right now you're raising your rent, so your NOI is going to be up to $100,000, $127,000 over the next 5 years. If you can raise these rents here 5% a year for the next 5 years, it's going to equal $127,000 a year. So that's not a huge jump, right? That's very, very attainable. You can probably do much more than that. I know I can, and our students have, all right? So here's where this takes you, being very conservative. Let's go to the top. So year 5 value, remember, by the fifth year, I'm at $127,000 a year in NOI. I'm at a same 5 cap. I'm at the same 5 cap. So your NOI divided by your cap rate equals your new value. The value of the property by year 5 is $2.55 million. So in 5 years, you brought the property value from $2 million to $2.55 million. Okay? And you did that. All you did was raise your rents 5% a year for the next 5 years. You can do that. Okay? You can do that. Now, here, that's a great thing, right? It's a great thing, right? Now, in addition to that, here's what you get. I wrote down plus, because in addition to creating $550,000 in forced depreciation, okay, you also get this. You're going to be able to pay down your loan by $100,000 in the next 5 years. Can you believe that? Okay, so not only did you create $550,000 in forced depreciation, you can add $100,000 to that. Okay, so now you're up to $655,000 in appreciation if you didn't wait until the interest rates come back down. Next, you're going to be able to depreciate the property about $44,000 a year. For 5 years, that's a savings of $220,000. Okay, it gets better. You're going to have other tax write-offs that you can add upon this. So I circle back to the main question, and that is, should you have waited until interest rates have come down? If you did, you would have missed out on all of this. Okay? So so the answer is, should you have waited until the rates come back down? No, you shouldn't have, right? You should be involved in commercial real estate investing and be smart about it, like we teach our students. Now, in addition to all of this, okay, this is a simple case study. There's more to it than that. Okay, here's the other things that you have to take consideration to make sure you address this question properly and deeply. All right. So number one is when you do this deal. Okay, when we do deals like this, we're also paying attention to what other properties have sold in the area, so that we have a basis of what we're going to offer. Got it? Okay. Next, location is important. Okay. So if cap rates differ in different locations, and there's a propensity for different locations to have more appreciation or higher stability than other locations. You have to also take location into consideration. You know the old saying that you can change your property, but you can't change the location. Okay. All right. And next, asset type. This is multifamily. A majority of deals are multifamilies, but we believe it is the asset type with the less risk. Okay, in our opinion, right? Number 4 is hold period, right? How do you beat the market? You beat the market and you create massive wealth in commercial real estate by thinking long term. Commercial real estate is a long game, right? There's a video I shared a couple of weeks ago. It appeared right here. How one of our students, he held on to his 5-unit property for an extended period of time, only 5 years. But he made almost $500,000, right? That video will appear right there. You can see that. You can see the benefit of buying commercial real estate, being a good operator, and holding onto the property. Okay, and that's how money is made in commercial. There's no flipping here. There's no short-term outlook here. Okay, it's precise exit strategy planning and execution. Okay. Now, to circumvent all of this and to beat this right here, right? There's one thing you can do, and it's one of the favorite things we do in our company, and that is, why not do creative financing, right? If the interest rates are so high in the market, right, and you have a 5% cap rate, why not put together a creative deal with your seller, right? We always preach this to our students. When you have a motivated seller and a motivated buyer, you can create beautiful things, and that's what we've done over the years. So there was a video I posted a while back. It's called Commercial Real Estate Creative Financing. It's going to appear right here. Watch it and you see what the possibilities are if you understand what these techniques are and then how to apply them. Okay, got it. All right, so now I hope I proved to you, number 1, how to deal with when cap rates are lower than interest rates, and number 2, should you just wait until interest rates come back down? All right, so the answer is no. You need to be wise and get into this game and understand and be a student of this game. All right, thanks everyone. I hope you enjoyed this video. If you want to learn more, just like what our students did, go ahead and apply to our mentoring program and be a protege of ours. The link will appear right there. If you just want to study and read a book, hey, I have a free book for you. The link will appear. Commercial Real Estate for Beginners. Go ahead and download it. Do me a favor, go ahead and like this video, right? It helps us create more videos like this just for you, right? Or just go onto our website, commercialpropertyadvisors.com, and check it out there. A lot of stuff there. All right, everyone. Thank you so much for hanging out with me today. I'll see you at the next video.